I look at the market and I really start with supply. I think supply is the single biggest headwind that we face in storage. So we typically start with the normal per capita supply analysis. Anything above 7, 8, 9 foot per capita starts to raise questions for us, but that's just the headline. And I said this in the panel. Supply is much more nuanced than saying, 9 per capita, we're not going to do the deal. The same per capita threshold means very different things and I think I use this example, dense infill markets versus, sprawling markets. So I look at Dallas or LA, Southern California, San Diego, Dallas, any dense market might tolerate 10 plus square feet per capita per person because they have the population growth, they have the job growth, they have the density. In a tertiary market, call it, somewhere in the Midwest, no job growth, no population growth, even 5, 6 square feet per capita can be problematic. And so you really have to look at the market and figure out, is it a market that can bear new supply? And on incomes I think are becoming really important too, because is it a market that can afford the utilization of supply? Like, do they need storage? Can they afford storage? Can they bear the rate increases that we're seeing now? We're seeing this ECRI strategy play out much differently in smaller, lower income markets than we are in higher income markets. It sounds obvious to say when I said it out loud. It sounds very obvious, but it's true that, you really have to pay attention to incomes too.